It's different this time. An investor's famous last words. But in a way, you're right. This time it is very, very different. You have institution buying Bitcoin, Ethereum, and even meme coins.
Bitcoin is money, everything else is credit.
I really believe in the next several years, Bitcoin hits $1 million.
Companies that no one has ever heard of are buying altcoins and putting them on their balance sheet and using that as a way to create a value proposition for why someone should buy the stock. We have ETF providers that are also filing for ETFs on tokens. And on top of all of that, you have Washington and an executive branch in the United States that has a cryptocurrency task force that has a mandate of making crypto mainstream and turning the United States into the crypto capital of the world.
The United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
I mean, it's really hard to say that that's not extremely bullish over the long term. The question that can make or break the opportunity that we have here in this bull run is whether or not we're going to continue to have a 4-year cycle, or if all of this institutional buy-in is going to lead to what people are calling a super cycle. Stick around until the end, because if you don't understand what I'm about to go over, you could watch life-changing gains come and go within a matter of weeks. I'm Keith D, here to talk about everything money and markets. Let's dive in. But before we dive in, let's actually start with some of the basics. What even is a 4-year cycle? Bitcoin runs on a clock that Wall Street can't really control, and this is referred to as the Bitcoin halving. What happens is every 210,000 blocks of transactions on the Bitcoin blockchain, there is a halving event where the reward that miners are earning for providing resources to the network gets cut in half. The 210,000 blocks happens around every 4 years. And when this happens, there is less new supply of Bitcoin that is added to the market after this event. And ideally, there's either the same amount of demand or even rising demand from that point forward. Historically, this single event usually ends up leading to a massive bull run in cryptocurrency markets, which is typically followed by a 50 to 80% crash over the following years. And that process so far has repeated like clockwork. The crypto market cycle can be broken down into 5 rough phases. This is a cycle, so you technically could start from anywhere in the cycle, but for explanation purposes, let's start off with the accumulation phase. And this is when prices remain relatively flat. And I say relatively because this is crypto. And this happens at the bottom of a bear market. And this is when long-term investors and smart money are very quietly buying up assets. The next phase of the cycle is the markup or expansion phase. And this is where prices start to gradually rise. And early momentum will bring in more investors. The third phase is going to be the blow off top or the euphoria phase. And this is when prices start exploding rapidly to the upside. And everyone is talking about crypto right when things are just getting ready to turn around. Because next we have the distribution phase, where money exchanges hands from the retail, who are now buying at the top, and the smart money, who is then selling all of their bags to those unlucky investors. This is essentially the very end of the party. But when you're in the middle of it, it's really hard to know that that's what's actually happening. And finally, we have the bear market phase, where prices first go through that initial dip, and everyone's saying, buy the dip, hold the line, diamond hands. Meanwhile, like I said, the party's over. And then we see prices decline sharply from there, making a lot of people very, very unhappy that they failed to potentially take profits at the euphoric phase of the market. But here's where things get interesting. Macroeconomic investors have actually pointed out that the 4-year rhythm in Bitcoin and the cryptocurrency markets have also roughly overlapped with the traditional business cycle in the United States and other developed economies. For instance, Raoul Pal very openly points to the ISM Manufacturing Index and the global liquidity cycle. Let's talk about the ISM Manufacturing Index. It's a monthly pulse on factories inside the United States. Above 50 means growth. Below 50 means contraction. So the idea here is that the ISM is doing well. Therefore, we're in a good part of the business cycle. And because of that, there's more liquidity in the system and therefore more money that can chase after risky assets such as Bitcoin. And when all of those things turn around, so will the price of Bitcoin and other cryptocurrencies. And this has typically lined up roughly with the 4-year cycle. One thing about all of this is that traditionally the cryptocurrency markets have been relatively small and therefore are very susceptible to the supply and demand dynamics, where even just a little bit of money flowing out could lead to dramatic declines in the prices and vice versa. So the question is, what happens when you have potentially trillions and trillions of dollars from institutions that are now entering this market? Does that break the chain of the 4-year cycle? That is the deca-trillion-dollar question. Some analysts believe that we're heading for what people are calling a supercycle, a market that just keeps grinding higher and higher without that traditional multi-year bear market. Of course, that sounds amazing to me and you, but we also have to realize that believing that that's what's about to happen and that everything is different is an extremely dangerous mindset to have. The thing is that if you just decide to not sell any of your crypto and just hodl diamond hands because we have a super cycle, then if you get caught off guard and we're actually going through a traditional 4-year market cycle again, then you're going to round trip your bags. Meaning that you've seen all of these incredible gains just to watch it all come back to where you started, and potentially even worse than your specific entry prices. Meaning that you've missed out not only on an opportunity to make money, but also to buy yourself time or to pay yourself for the time that you spent in this market. This window of euphoria is extremely small. So if you're not taking advantage of those opportunities, then you might not get to for another 4 years, assuming that we repeat the 4-year cycle. I've told you guys my story and how I've done this myself, but not this time. Instead, this time I have an actual game plan in place. I have specific price targets where I will be taking profits. This is not financial advice and is simply for educational and informational purposes only. But here's what I'm doing. As the prices of my crypto goes up, I'm going to take more out at each of my price targets. That way I'm securing even further gains as the risk in the market gets higher. For example, let's imagine that I had 10 Bitcoin. I would take 1 Bitcoin off the table at my first price target. And then I would take 2 Bitcoin off the table at my next price target. And then 3 at the higher price target after that, and so on. But to be clear, there is a significant portion of my crypto that I will never sell. And this is what many call a moon bag. There will also be a portion of my portfolio and even the gains that I'm taking off the table that I'm going to deploy into decentralized finance protocols so that I can continue to earn passive income on my crypto even throughout the bear market. The thing is we want to be prepared for either outcome. Either we have a traditional 4-year cycle and a lot of investors get caught off guard thinking that things are different this time, or things actually are different this time. And the worst thing that you could do in that position is sell all of your crypto in hopes to buy it back lower without having an actual plan in place. And then you end up chasing the market higher and buying it when it goes higher just to watch it actually roll over after that. So the question is, how do you actually plan for both of these scenarios? And do you have an actual plan in place? This is exactly what we're going over inside of my private mentorship group. We build strategies to ride booms, protect gains, and prepare for the next window of generational opportunity as it arises. We're not providing financial advice, so don't come if that's what you're looking for. What this is about is education, actually understanding what crypto is, why this is so important over the long term, and how to actually make sure that when you're going through this, you're not flying blind. If you're serious about navigating these market cycles and also preparing for the long-term generational shift that is occurring, click the link in the description to apply for my mentorship group and see if you qualify. We are right at the cusp of this euphoric phase in the market, which means that if we have a traditional 4-year cycle, that the bear market is much closer than many are really prepared for. Please do not get caught off guard. I'm Keith D, here to talk about everything money and markets. Be sure to like, subscribe, and comment down below whether or not you believe that we will continue to have a 4-year cycle, or we're actually going through a super cycle and everything is actually different this time. See you next time.